Hello students, welcome to this video lecture, Unit 3, the Social Entrepreneurship Process. In this video lecture or in Unit 3, we are going to discuss what are the various types of frameworks, what are the different types of models, and also we are going to listen various voices from the field. But particularly in this video lecture, we are going to discuss what is a framework, why it is very important in social entrepreneurship. Yes, what is a framework? In social entrepreneurship, a framework refers to a structured approach or a conceptual model that guides the actions and decision making processes of social entrepreneurs. It provides a systematic way to assess the social, economic, and environmental impacts of an enterprise, helping organizations plan, execute, and evaluate their ventures. Frameworks are used to develop business strategies, track progress, measure outcomes, and ensure the long term sustainability and success of social enterprises. In short, framework gives you the roadmap of your project. It gives you the organized information for doing a project, and it also enhances the performance of the entrepreneur. It makes him more competitive. And also we can say framework is a system or rules that govern a project. Next one is in social entrepreneurship, they are essential. Frameworks are essential. It gives you the skeleton of the project. They are essential because they provide the guiding principles and strategies for creating social impact while ensuring sustainability. It clearly says what is what and what should be the first things and what is next, and it takes you to the proper direction. It takes you in a proper direction. These frameworks help social entrepreneurs align their goals, operations, and approaches to effectively address social issues. In simple terms, it's a set of guidelines or tools that help social entrepreneurs navigate their journey and achieve social, financial, and environmental goals. Key elements of framework in social entrepreneurship. Mission alignment. It helps you to align your mission objectives with the social mission. Social entrepreneurs, they have an objective, they have a social mission. So this framework helps them to align their business objectives with their social mission. It encourages organizations to focus not only on profit but also on solving a social or environmental issue, ensuring the enterprise remains mission driven throughout its life cycle. Resource allocation. Frameworks help define how resources such as capital, human resources, and social capital, so many capitals are there, and it helps them to allocate these resources for achieving both business success and creating a social value. This ensures that there is a balance between profitability and social impact. Next one is impact measurement. Impact will be measured. A key element, this is one of the key elements in this social entrepreneurship framework, is the ability to measure and assess the social impact an enterprise creates. Many frameworks incorporate tools to assess the outcomes and effectiveness of the social interventions. Okay, their main aim is to create a change, create an impact in the society, and they have to measure the impact of their business actions, and they will also assess the impact. If they assess if there is any deviation from their objective, it helps them to rectify their mistakes. Stakeholder engagement. Frameworks often emphasize collaboration with stakeholders such as communities, governments, investors, and beneficiaries. This ensures that social enterprises are truly meeting the needs of their target audience while considering broader societal interests. Stakeholder engagement means, okay, those who are going to get benefited by this project, they'll be consulted. They'll have enterprise will have a collaboration with these people to find out their needs and requirements. Sustainability and scalability. Social entrepreneurship frameworks stress the importance of creating a sustainable business model. This includes ensuring that enterprises generate enough revenue to be financially viable while continuously expanding and scaling the social impact. These business enterprises, these companies should generate revenue to meet their expenses, and they also stress that they should not always depend on funds, grants, or donations. They have to generate their own revenue. Evaluation and accountability frameworks often provide methods for evaluating performance, track the progress, and maintaining accountability. This could include creating systems for feedback loops that allow the enterprise to adjust strategies based on evaluation results. They measure the impact of their project. After measuring, they will evaluate. They will also track the progress of the project. So, if there is any deviation or if there is error, they will always adjust and rectify or adjust the strategies based on the feedback. Various types of framework, let us discuss one by one. First one is theory of change framework, TOC. It is a comprehensive methodology that maps out the path to achieving social change. It starts with identifying the long term social goals and then works backward to define the necessary preconditions, activities, and outputs that will lead to these outcomes. What are the key elements in this theory of change framework? What are the inputs? So, inputs are the resources needed to implement the plan. That is, we need funding, we need human resources. What are the activities that are associated? So, what actions will be taken to achieve the social mission? We need to take an action to implement our action. So, what are the actions? So, what is the output? The direct results of the activities. So, what is the outcome? The changes or benefits that occur as a result of the activities. So, we are doing all these things to create an impact, to bring a change in the society. So, that is the outcome. What is the impact? The long term social change or benefits. For example, a non-profit focusing on education might create a theory of change that explains how providing scholarships to low-income students will lead to a better educational outcomes and eventually poverty reduction. So that is the theory of change. What change their policy or project will bring in the society. So, for example, Grameen Bank, their theory of change focuses on providing microloans to the poor, particularly women, as a means of empowering them economically. So, by providing capital or access to capital, that is the input, capital is the input, women can start or expand small businesses, activities. They are only providing microloans and improve their financial status, outcomes, which leads to poverty reduction and gender empowerment. So, this is the impact. Okay. Next one is business model canvas. This is another framework. It is a strategic management tool that helps social entrepreneurs map out their business model in a single page. It helps them to identify their position in the market. It is designed to identify key aspects of their business, including the value proposition, customer segments, channels, revenue model, cost structure, and resources. It will have a lot of questions, and if we answer those questions, we will be able to get a clear picture about the project we are going to start. Key elements in the business model canvas: customer segments, who are the beneficiaries or customers of our project; value proposition, what is the unique proposition that our project is going to offer to the society. So, what problem is being solved or what is the solution provided. Channels, what is the channel they are going to choose to reach the target audience, or how will the solution reach the target beneficiaries. Revenue streams, how will the enterprise generate income. Key resources, what resources are needed to operate the business. Key activities, what are the critical activities to deliver the value proposition. Key partnerships, who are the stakeholders, partners, and collaborators. Cost structures, what are the costs associated with running the enterprise. If we are able to answer all these questions, okay, this framework will give a clear idea about our project. Example, Tom's shoes. Tom's uses a one-for-one model where every pair of shoes sold results in a pair of shoes being donated to a child in need. If you buy a pair of shoes from Tom's, another pair will be donated to a child in need. So, their value proposition is solving the problem of inadequate footwear in impoverished communities by selling shoes to a target market, while their revenue stream comes from sales. Triple bottom line framework. This triple bottom line framework focuses on three main pillars. They are people, planet, and profit, the three P's. It stresses that social enterprises should not only focus on financial profit but also on social impact and environmental sustainability. So, key elements: people, the social impact, how the enterprise benefits individuals or communities; planet, the environmental impact, ensuring the business activities do not harm the planet; profit, the financial sustainability of the enterprise to ensure long term viability. So, they have included the planet also, the environment also. Example: a company that sells eco friendly products and reinvests a portion of its profits into local communities. Patagonia, this is an outdoor clothing brand. This company integrates sustainability into its business practices. So they focus on environmental conservation, that is, planet, ensuring fair labor practices and community engagement. People, they are involving stakeholders also, and generating profit by high selling high quality outdoor gear, profit, right? Social lean canvas framework, this is similar to business model canvas. It is an adaptation of the business model canvas specifically tailored for social enterprises. It helps entrepreneurs focus on the unique aspects of social impact ventures, emphasizing the problem, solution, social impact, and sustainability. Key elements. So, what are the key elements? Problem. What social problem is being addressed? Solution. What is the proposed solution to the problem? Key metrics. How will success be measured in terms of social impact? Customer segments. Who are the beneficiaries or stakeholders? Unique value proposition. What differentiates the social venture? Channels. How will the solution be delivered to customers? Revenue model. How will the business generate sustainable income? Cost structure. What are the costs involved in delivering the solution? This is exclusively designed for social enterprises. Next example is Kiva. Kiva allows people to lend money to low income entrepreneurs globally. The problem being addressed is the lack of access to capital for small entrepreneurs, especially in developing countries. So, the solution is providing microloans through an online platform, measuring success through the number of loans dispersed and business supported. Okay. Getting funding is very, very difficult, especially for small time entrepreneurs. Banks will not be coming forward to lend them money. So these companies which offer microloans are doing a wonderful job. Results based finance, that is RBF framework. Results based financing is a framework that links the disbursement of funds to the achievement of specific results or outcomes. Okay. So they'll mention an outcome, they will specify a target. So if the target or the outcome is achieved, they'll give you the finance. This framework is often used in social entrepreneurship, where funders only provide financing when predefined social results are achieved. So, if the results which they have mentioned is achieved, they will give you the finance. Key elements: outcome based targets, that is, specific measurable goals. Example: number of children educated, number of households with clean water. So, if they are able to quantify the results, they will be able to get the finance. Performance verification, an independent assessment to verify whether the target has been met or not. Payment linked to results. Payments are made based on achieving these outcomes, creating an incentive for efficient and effective delivery. This will also motivate the people, those who are borrowing finance, to achieve the results. Example: the Global Partnership for Education (GPE) uses RBF to fund educational programs in developing countries. Payments to governments are contingent on achieving specific education outcomes such as increased school attendance rates or improvements in literacy. Human centered design. HCD focuses on designing solutions that prioritize the needs and experiences of the end users. It involves deeply understanding the challenges faced by the target community and co creating solutions with them. They also engage stakeholders. Key elements: empathy, understanding the challenges, aspirations, and context of the people the social enterprise aims to help. Define, identifying the core problems that need solving based on user insights. ideate, they generate ideas, and they also generate potential solutions based on user feedback. Prototype, creating low cost, low fidelity prototypes to test and refine the ideas. Testing the solutions with real users and iterating based on feedback. So they get the feedback, and based on the feedback, they adjust the project or the results or the systems. Example, idea.org. This social enterprise uses HCD to design solutions for global poverty. One example is the Water, Sanitation and Hygiene WASH program, where they work with communities to co-create affordable water and sanitation solutions tailored to local needs. Stakeholder theory framework. This framework focuses on understanding and managing the relationships between a social enterprise and its stakeholders. The idea is that an enterprise's success depends on balancing the interests and needs of all stakeholders, including customers, employees, community, government, and investors. So, key elements: identification of stakeholders, that is, who are the people, the key groups that are impacted by the enterprises. Not only those people, those who are get benefited, and also those people, those who are offering that benefits. So they are also considered as stakeholders. Engagement, creating strategies for stakeholder involvement and collaboration. Balancing interests, ensuring that the enterprise addresses the concerns and needs of all stakeholders, both internal and external. Example, Ben and Jerry's. This is an ice cream company. This company follows the principles of stakeholder theory by considering the needs of all its stakeholders, including employees, suppliers, customers, and the communities in which it operates. It uses its business platform to advocate for social causes such as environmental sustainability, fair trade, and social justice. See, if you are able to satisfy your internal customers, that is your supplier and employees, you will be able to satisfy your external customers. So all are stakeholders. The stakeholders should be satisfied. The social value framework. The social value framework focuses on measuring and creating value that goes beyond just financial profits. The framework emphasizes social impact, how much positive change a social enterprise can generate for its beneficiaries and communities. It evaluates how well an organization is fulfilling its social mission and delivering value to society. Key elements: social impact, the positive effect the enterprise has on the community or the specific group it serves; social value creation, the processes and actions the enterprise undertakes to generate this impact. This could include health improvements, job creation, environmental benefits, or educational advancement. Measurement: how this social value is quantified and assessed. Metrics could include lives improved, educational outcomes, or reductions in environmental harm. Sustainability: ensuring that the social value generated is long lasting and can be maintained over time. So, how value is added to environment, people. Social practice, the big issue. So, big issue is a social enterprise that tackles homelessness by providing individuals with the opportunity to sell a weekly magazine. So, the social value created includes providing a means of income for homeless individuals, offering social integration, inclusiveness, and also helping vendors rebuild their lives. So, success is measured by the number of individuals who transition out of homelessness, reintegrate into society, and achieve financial independence. Key features: focuses heavily on long term impact. Social return on investment is prioritized, measuring the value created rather than just financial return. Incorporates community well being and into the enterprise's goals and operations. So, this company uh, offers them benefits by giving them magazines to sell. So if they are able to sell this many number of magazines, they will be benefited. So indirectly they are empowering them. They give them, in addition to benefits, financial benefit, they are also give them a dignity. They are empowered also. The Sustainable Development Goals framework is a globally recognized framework consisting of 17 goals established by the United Nations. These goals address various global challenges including poverty, inequality, climate change, environmental sustainability, peace and justice, and gender equality also. Social enterprises aligning their activities with the SDGs ensure that their work contributes to broader global objectives and targets. Key elements: the SDGs cover a wide range of critical issues. For social enterprises, the aim is to align their efforts in the mission with one or more of these goals. For example, clean water, gender equality, affordable education. Local action for global impact. Although the SDGs are global, social enterprises work locally to address specific targets, specific audience, contributing to global goals in the process. Integrated approach. The SDGs framework emphasizes a holistic, integrated approach, meaning that enterprises should aim to create positive impacts across multiple SDGs rather than focusing on a single goal. Accountability and reporting. Enterprises are encouraged to measure and report on their impact related to specific SDG targets. Example: D-Light is a social enterprise that provides solar energy solutions to off-grid communities in Africa and Asia. So, by offering affordable solar-powered lights and energy systems, D-Light contributes to SDG 7, that is affordable and clean energy, and also SDG 13, climate action, and also SDG 1, no poverty. So, by helping to reduce energy poverty, mitigate climate change, and improve the lives of low-income households. So, one single company is able to address three or more than three different SDGs. So, key features: emphasizes alignment with global goals and contributions to international development. Encourages social enterprises to take a systemic approach, addressing multiple interconnected challenges. That is a transformation, not just transaction, transformation of the society. Provides a clear, internationally recognized framework for impact measurement and accountability. Next one is Impact Management Project IMP framework. This framework is a comprehensive framework designed to help social enterprises and investors manage, measure, and assess the social and environmental impacts of their activities. IMP provides a systematic approach to impact management by categorizing and evaluate impact intentions, measurements, and stakeholder outcomes. Key elements: impact intentions. So, what is the intention of the impact? The enterprise defines the impact it intends to create. Example: improving health, reducing carbon footprint, and creating job opportunities. Measurement of impact. This framework emphasizes the use of specific metrics to measure progress toward the intended impact. These could be quantitative or qualitative depending on the nature of the enterprise and its mission. And performance, impact performance. The framework allows enterprises to assess how effectively they are achieving the intended outcomes. This includes determining if they are achieving the desired social outcomes at the scale they anticipate. Example: it promotes stakeholder-centered approach to impact measurement. This means the social enterprise should actively engage with and seek feedback from stakeholders to understand how their activities are impacting them as they have intended. Example: a social enterprise focused on providing education to underprivileged children might use an impact measurement framework to track how many students graduate, get jobs, or improve their social mobility. For example, Acumen, it uses this framework, that is impact management project framework, to assess the impact of the social enterprises it funds. Acumen focuses on measuring how its investments contribute to social good, especially in sectors such as healthcare, education, and energy. For example, Acumen's investments in companies that provide clean energy or affordable healthcare services are evaluated using IMP metrics to track outcomes such as lives improved, access to services, and reductions in poverty. Key features: It focuses on impact measurement and performance, provides tools for managing, optimizing social impact in a systematic way, emphasizes transparency in promoting or reporting and stakeholder engagement, a global standard for impact management, helping enterprises communicate their impact to investors, customers, and stakeholders. The logic model framework. The logic model is a systematic way of planning, managing, and evaluating programs by mapping out the logical flow from inputs to activities to outputs and finally to outcomes and impact. It is used to visualize and track the pathways of change that an intervention is expected to produce. Inputs. So, normally, inputs means resources such as funding, human capital, or equipment. Activities, the interventions or services provided to achieve the intended impact. Outputs, the direct products or services delivered by the activities. The number of training sessions held. Outcomes, the short-term or long-term changes in the beneficiaries or community. Example, skills gained, improved health. Impact, the broader long-term effects the program is intended to create. Example, poverty reduction and empowerment. Example, social enterprise, Room to Read. Room to Read works in education by improving literacy and gender equality. In the logic model, inputs might include funding and partnerships. Activities include providing books and educational materials. Outputs are the number of students reached or books distributed. Outcomes include improved literacy levels, and the impact is broader educational access and reduced gender disparity. Key features, it focuses on cause and effect relationships between activities and outcomes. It helps social enterprises to track progress and adjust strategies based on data. Next one is the 5 capitals model. 5 capitals model framework is a framework that emphasizes the 5 forms of capital that are necessary to build and sustain a successful social enterprises. These 5 capitals are the financial capital, human capital, social capital, natural capital, and intellectual capital. This framework helps social entrepreneurs to understand the different types of resources needed to create value and maintain sustainability. The 5 capitals model, the key elements are financial capital, that is the money or resources that can be used to finance operations, expansions, and sustainability. Human capital, the skills, the knowledge, and capabilities, that is the expertise of the people involved in the enterprise, including employees and stakeholders. Social capital, the relationships, networks, and trust built within the community or with stakeholders. Natural capital, that is the environment. The environmental resources are ecosystem services that the enterprise relies on or is going to impact. Intellectual capital, the knowledge, innovation, and intellectual property that drives the enterprise's solutions. Example, Fairphone. Fairphone works in sustainable electronics by using conflict-free materials. Thus, it reduces e-waste and also it ensures fair labor practices. In terms of the 5 capitals, financial, investments to build the business; human, expertise in sustainable product design and supply chain management; social, it collaborates with ethical suppliers and community-based efforts; natural, because of using or by using sustainable materials, it minimizes the environmental footprint, it reduces carbon footprint; intellectual, design innovations in phone, sustainability. So, what are the key features? It integrates a holistic view of the enterprise's capital, and it also encourages long-term sustainability by balancing all forms of capital. It helps ensure that all resources are optimized for creating social impact. Next one is the social return on investment, SROI framework. It is a framework for measuring and accounting for the social, environmental, and economic value created by the social enterprise relative to the resources invested. The goal is to quantify the social impact in monetary terms, making it easier to understand the return on investment of social enterprises, especially for investors or stakeholders. Inputs, the resources, example, money, time, and effort, invested in the social program or enterprise. Outputs, the direct deliverables, the number of beneficiaries served, services delivered. Outcomes, the social changes or benefits resulting from the activities, that is, improved education, better health outcomes. Impact, the long term change or benefit that results from the intervention. Example, reduce poverty, increased access to clean water and health and hygienic environment. SROI ratio, the ratio of social value created to the investment made, that is $5 of social value for every $1 invested. So the big issue, another the same company, by tracking the SROI of its work, the big issue can demonstrate that for every dollar invested in their program, a significant amount of social value is created. So if $1 they have to maximum get $5 returns, right? So this includes improving the lives of homeless vendors, reducing dependency on social welfare, and also creating opportunities for economic independence. Key features, it monetizes social impact, making it easier to communicate to investors. It also helps enterprises track efficiency and measure social impact against investment. It provides a clear metric to demonstrate how resources are used to create value. It also thus it minimizes the resource wastage. Blended value framework. The blended value framework is based on the idea that social enterprises must create value across multiple dimensions, including economic, social, and environment. It suggests that financial returns and social returns are not separate but intertwined, and enterprises must blend these two aspects to create value. They are not considered financial returns and social impact returns are not considered as two different entities, but they share a close relationship. They are intertwined according to this framework. Key elements, economic value, the financial returns or profits generated from the enterprise's activities. Social value, the positive impact the enterprise has on society. Example, reduce poverty and improved health. Environmental value, the contributions the enterprise makes to environmental sustainability. Blended value, the combination of all three value types resulting in the overall impact of the enterprise. Example, seventh generation. Seventh generation is a company that produces eco-friendly household products. So it blends economic value, profits from product sales, social value, supporting sustainable lifestyles, and environmental value, reducing environmental harm through product ingredients and packaging. They ensure that each aspect of their business is working towards positive change. Key features, it encourages the integration of economic, social, and environmental objectives. It focuses on value creation across multiple dimensions. It helps enterprises understand and optimize the trade offs between profit and impact. The Participatory Action Research Framework. Participatory is a framework that emphasizes collaboration and community involvement in identifying problems and co-creating solutions. In this framework, social entrepreneurs and community members work together as partners rather than entrepreneur being the sole decision maker. Key elements, participation involves community members actively in the research and solution design process. Action focuses on practical actions that lead to positive change based on the research. Reflection, community members reflect on the outcomes and learn from the process. Collaboration, the social entrepreneur and the community work together to design, implement, and evaluate solutions. Finally, the output reaches only the community. So, if they are involved right from the first stage, it will be helpful, and the desired, the intended results will be achieved. The participatory, for example, the Barefoot College. The Barefoot College trains women from rural communities, particularly grandmothers, to become solar engineers. The women participate in every stage of the process from training to implementation. thus ensuring the solution is community led. They actively engage in problem solving, action, and reflection to ensure sustainability of the solar energy systems. This company they train the aged women to install solar panels, to repair these solar panels, and it emphasizes co-creation and collaborative problem solving. It ensures the solutions are relevant and effective for the target community. It focuses on empowering communities by involving them in the entire process. Conclusion. Frameworks act as a roadmap for social entrepreneurs, ensuring their ventures are well planned, impactful, and sustainable. By following a framework, social entrepreneurs can manage their ventures systematically, optimize their resources, and stay focused on their social mission. By integrating these frameworks, social entrepreneurs can design ventures that create meaningful, sustainable, and impactful solutions to complex social challenges. Each of these frameworks provide a unique approach to solving social problems through entrepreneurship. Depending on the nature of the social issue being addressed, social entrepreneurs can adopt one or a combination of frameworks to structure their approach, operations, and impact measurement. In a nutshell, a framework gives you the roadmap for your project and it makes things simple. Thank you.